Let me say this another way. Imagine a single dollar in your pocket at the end of the month. That's a dollar that you didn't spend at the grocery store or on business expenses. We'll call that discretionary income. So that $1 for, let's say, a 45-year-old, he has a choice. He can either spend that dollar or he can put it into the Bank on Yourself designed whole life policy with something called a paid up additions rider. Putting that paid up additions dollar into the policy means it will grow consistently and predictably, even with guarantees built in. Let's say this individual who's 45 years old today, when he makes that $1 deposit, lives to be 90 years old. That dollar would then grow, again with predictability and guarantees built in, up to $9, with dividends on top, which dividends are not guaranteed, but they've paid a dividend every year for over 100 years, these companies that I work with. Now, what happens if you don't put in the dollar? Well, you don't have $9. Again, uninterrupted compounding only works if you can save that money and not spend it. And some folks get frustrated because they say, well, Mark, I can put that dollar in and I want that $9 later, but I still need to access the dollar for things in life. Okay, well, there's something called a policy loan, which allows you to borrow against the policy and then pay it back. Let's say it took you 5 years to borrow that dollar out and then pay it back over 5 years. Let's say the loan interest rate at that time was 5%. That means the interest was a charge of 13 cents to borrow that $1 and then pay it back on your terms over 5 years. Let's say that you didn't just do this once, but you did it twice, you did it a third time, and you even did it a fourth time. Each time the borrowing and paying back cost you 13 cents. That's a grand total of 52 cents to borrow that $1 all throughout your lifetime. Now remember, the cash value continued to earn interest and grew even on the capital you borrowed, such that your cash value grew to $9 over your lifetime. Now you did spend 52 cents, buying those cars or whatever it was you bought with that dollar. And so you still have $8.48 remaining at the end of your lifetime. Now, here's my question. If you had a plan and your own financial system, and for every dollar you put into that system, even borrowing that dollar and paying it back with interest 4 times over your lifetime, you still ended up with a net $8.48? How many dollars would you want to put in there?